let's get into the 10 stocks that you want us to have a look at, but also one which is our stock of the day, and a stock that's in the news. And I thought intelliHR was worth having a look at, reporting a record fourth quarter this morning, with new contracted business exceeding $1 million for the first time ever, marking a 236% pop on the year. Big in percentage, but off a low base, of course. Comes as it reports an operating cash loss of $1.6 million on revenue up 165%. Look ahead, expansion is the name of the game as it targets the US, UK and Canada for growth in the financial year 2022. Gaurav, intelliHR is sort of a human resources platform for companies to use, isn't it? What did you think of the trading update and the stock?
David, I don't know this company very well, but from the numbers, it did appear pretty decent, actually. It's a small business, only $60 million, and it was in the news a little while ago because Bevan Slattery, the modern day tech prophet, he took a position and the share price just took off. And since then, it's subsided a fair bit to the point where it's probably a bit more interesting now. It's as you can see, it's halved over the last few months. I have a couple of issues with it, really. And the main reason we're not looking at it internally is because I'm not sure this is the right climate to look at small, highly speculative software businesses. And this is a super competitive space as well. There are lots of established and disruptive competitors trying to do exactly the same thing. And HR software isn't revenue generating for businesses, for most businesses anyway, and it tends to be a cost center. So price really matters more than functionality in this space as a general rule. And so you tend to see a lot of cutthroat competition, and the best product is not the one that typically gets installed. And because of that, I think the market is just a lot more competitive than it would be for something like, say, for Xero, which is just absolutely instrumental in the way a lot of businesses operate, or something like a Hansen, where actually is responsible for collecting in the revenue, for bringing the revenue in. As I said, this is a cost center. So look, it doesn't hold a great deal of appeal to me at this stage, but there's certainly nothing wrong with the result. It looks like quite a decent business, well led, got some interesting shareholder backing, and the result was quite impressive as well. So look, under different circumstances, we might look at it, but there's so many ideas around. We really have to decide where to allocate time and what's the best bang for your buck. And I'm not sure this is it.
Yep. Mathan?
Yeah, look, I think a lot of that, what Gaurav said, makes complete sense. It is a small cap, it's a micro cap. You're coming in at a time when you've had, 3-4 years of great macro for tech stocks. And this is a sector, there's been a few players that the market's been getting excited about in the smaller micro caps. It's been People Infrastructure, PPE, ELO, Elmo Software. These have been things that the smaller end that's been market darlings. ELO, it's pretty similar in context. Again, none of them are similar, but they're in the same play. But that's done pretty much the same thing in charts. Everyone got excited and it's come off. There's a lot of acquisitions in play. Again, I looked at the numbers. They look like they're burning cash and they're probably due for a cap raising. So the market's probably a bit more circumspect, waiting for that to play out. Look, Gaurav's right. The numbers are good. They're executing well. The question would be, again, my background in running a tech firm, what you find is when it's a cost-based play, people rarely change. It's just not worth it for them. The amount of work you have to do to change systems is always tough, and HR is not the most exciting thing, and nobody really in HR wants to do anything to change any of the systems. So these things take a lot longer than what you think. So things that are much more front-end facing and revenue generating tends to be the first thing that gets changed. So I think when you go into a tougher economic environment, it's going to get a bit harder. So I'm not chasing in this sector, but look, they seem to be doing quite well. So in that context, I think the growth story still plays out. If you like the growth story and you're there for the tech play, I think this one looks pretty good.
Okay.
And as I said, after Bevan Slattery's fairy dust is wearing off, you finally get another shot at it at a pretty decent price.